right, here is a chart on Micron. As you can see, been pretty ugly lately. There's a lot of support right where it traded down to just over the last couple days, last week, 32.5. If it breaks down below there, you know, this thing could head towards 29. On the upside, between the 50-day and the 200-day up here, there's going to be some really, really major resistance. Well, Chris, we only have a few spreads on right now, and my guess is you might be trading a little bit too large, but we can get to this right after I finish this Micron discussion. Okay, so lots of support here, lots of resistance here. Okay, let's see what the market is expecting here in Micron. What is the expected move here? Okay, Fred, you say about $2.70, right? Okay. I think it's a little bit less than that. Robert, I know that's what Thinkorswim shows all the way to the end of the week. The way that I would look at this, because, you know, in FedEx, we were sitting right at the money when we looked at what the expected move was. We're not right at a strike right now. Let me put this up on the board. Okay, stock is $33.85. The 34 call is $1.25. The 34 put is $1.38. Okay, so if we were to just look at the straddle there, that straddle equals $2.63, right? Adding the call and the put together. However, we're not sitting right at the money, and we want to look at all of the extrinsic value, the premium of the straddle. Well, the put is 15 cents in the money, right? 34 down to 33.85. Is that right? Everybody see that? So if we subtract out the intrinsic value to come up with all of the premium or the extrinsic value of the nearest straddle, we get $2.48. Okay, so we really have an expected move of about $2.50. Okay, so $2.50 is the expected move. That puts us at an expected range of 31.35 up to 36.35. Everybody see that? We're always looking at the nearest one, Dennis, at the front month. So this is this week's expiration. that we're looking at. What's 15, Fred? The 15 cents? Because remember, when we look at the money straddle to determine the expected move, what we're really trying to do is take the amount of premium, the amount of extrinsic value in those at-the-money options. Okay? So if we are evaluating the 34 straddle, but the stock is not trading 34, it's really trading 33.85, then the entire value of the call is premium, is extrinsic, but the value of the put, 15 cents of that is intrinsic value and not premium. So we have to subtract that 15 cents to actually get the amount of premium or amount of extrinsic value. And that gives us the representation of the expected move then. Okay, the reason that we use the at-the-money straddles is because we always want to look at how much premium is priced into the options. Okay? So here's our ranges, 31.35, 36.35. Again, going back to the chart here, you know, there's some support at 32, some resistance at 36. I wouldn't say that there's huge technical support resistance in either spot here. Okay, so first let's look at an iron condor for something that might be in that range. So what I'm looking at here, for no other reason than it's just arbitrary to get us close to the expected range, I'm looking at $1.50 wide iron condor. Now this is really expensive. So my first alert should be, if this is really expensive, maybe I've selected the wrong strikes. Right? Because if I'm looking at $1.50 wide iron condor, I typically would want 1-to-1 reward to risk, which would be 75 cents, right? However, this thing's trading 87, 88 cents. So what did I do wrong here? Well, let's put this up here. The 32.5, 31, and 35, 36.5 iron condor is trading 87 cents. I know exactly what I did wrong. Okay, so what are my break-evens here? $31.63 up to $35.87. Okay, the 87 cents is great. However, my break-evens, which I want to be at the expected range, is well within the expected range. That's why I'm able to collect more money on this iron condor, because I didn't choose the appropriate strikes. So what do I need to do here to select the appropriate strikes? What do I need to adjust? Okay, I think we need to move both sides. right? Because the break even here to the downside is not far down enough. The break even to the upside is not far up enough. So I think we need to move our strikes on both sides here. I think we need to lower the put strikes. We need to raise the call strikes. So we probably want to do something like this, which now you're going to see is much more in line and much more appropriate with what we would have expected. Okay, so now the 32, 30 and a half and 35 and a half, 37 iron condor is trading 70 cents. We would like to see 75, but it's trading 70. But however, look what it's done to the break-evens. The break-evens are now 31.30 up to 36.20. Now we're almost right at the sweet spot of the expected range. Okay, so as we always talk about, more risk, more reward, less risk, less reward. So now you can see what that difference of 17 cents in this iron condor here to this iron condor here, now you can see why the difference in price. It all comes down to the risk and what the break-even spots are. Does everybody see that? Angel, the break-even spots are the short option plus or minus the credit received. So on the put side, the short option is the 32 strike. So 32 minus the 70 cents received would be 31.30. On the call side, the short option is the 35 and a half. So 35 and a half plus the 70 received gets us to 36.20. And we always want to measure the break even versus the expected move because we want, at a worst case, the break evens to be at or just outside of what the market's expected move is. Make sense? Does that help now? Okay, good. So, 70 cents is not bad. Ideally, we'd want to get 75 cents for that so we could be at a 1-to-1 reward to risk. Okay, we're not there right now. Maybe it pops up a little bit later. We also haven't determined any sort of direction. If we want direction here in Micron. Personally, I'd love to see something to the upside, like a calendar call spread or a diagonal. Okay. So any questions so far? Well, Robert, that's being worked into the market. That's being priced into the market. Just remember, though, G20 is not till the end of the week. That's not going to impact this trade. That's not going to impact what we are doing just specific to earnings. All right. Thanks, Jake. All right, guys, I have to run over to the CME really quickly and record something over there, an interview that'll be on later. When I get back, we will continue. We will pick up the Micron discussion and look into other possibilities. Call spreads, put spreads, strangle swap, calendars. Okay? So let me get this part of the recording going. We'll call this part 1. And I will be back in a little while to do part 2.